what do you all think is the greatest problem that human civilization has faced? And it is a problem that we had 5,000 years ago, and it is the problem that we have right now. And it has never been solved properly, hopefully, till now. Or another one. What do you think when someone says money to you? What comes to the mind when you think about money? Like, what really is money?
Something that helps us trade with people.
Okay, that's fair definition. Something that reduces barter, yeah. What's any guesses from you?
Suddenly, I was thinking a transactional item that reduces barter.
So something highly tradable, which I can convert to goods and services at any time. That is a very fair way to look at money. But the way I look at it is, I see it as a store of my time and energy into the future and across distances. What I mean by that is, I am a hardworking guy. I did some labor, I performed some operation, and I got paid for it. I want to be able to preserve my purchasing power into the future and across the places. I might not immediately want to spend that. And that is the reason what money was for. Now let us look at an interesting case which directly starts with what money really is. So this picture was taken on one island known as Yap Island, and these are limestones called ray stones. They were being used as the currency and a medium of exchange between the people. So people would usually mine limestone, which was very rare on that island, or maybe they would go to nearby islands, and the entire process was very difficult. And you see that the stones are of different sizes, different lengths, and they are spaced apart. But what strikes out is that whenever someone wanted to trade with other tribe member, no one physically gave the stones. What they did was, the stones were always kept there, they just reassigned ownership. So for example, the five of us, we decided that, hey, this big stone belongs to me, the right one belongs to Kumar. And if I wanted your cow, or maybe I wanted to buy a house, or maybe I wanted to pay a dowry, I would just transfer the ownership. And how did we transfer ownership? Through consensus mechanism. Consensus means that all of the tribes people came together, or at least a majority of them, let's say 75% of the people came together. The person who is the owner of that stone, they publicly declare that, hey, I, Arin Mangal, want to transfer my big stone to Kumar as a gift. And the community mentally took a note, and then everyone knew that now the stone belongs to Kumar and not Arin. And do you know what the interesting part about that is? That physical stone does not even really matter. So once the stone was on a ship, and that ship sank, along with it the stone sank. So people thought that, oh no, this guy has lost his entire life savings. But then they decided, hey, that stone has to be in water. So we will assign ownership within the water. Just like that. And they kept on trading for years and years on end. This establishes that money is more of an accounting problem and a ledger. You all know what a ledger is? Ledger is a page or a,
Sort of public document which is accessible to everyone, where all the transactions are recorded.
that would be a public ledger, but ledger is just a record of transactions. That's all a ledger is. So this example, I want you to keep this example in mind, because throughout this presentation I'll keep circling back to it, and you will try to connect the dots with it, and how Bitcoin is exactly this mechanism, just on a digital 21st century scale. So RAI stones tell us that at the bedrock, we just have to have some hard currency which should be difficult to produce, mine. You can't just increase the supply arbitrarily, and everyone should agree on who owns what. And this ancient principle we are trying to replicate in Bitcoin. We'll go forward and understand how money evolved and what went wrong that we are in such a state right now. So,
Arun, one second.
yes.
Yeah. Could you explain what happened when this stone sank in the water?
Yes.
How did they?
Yes. So you see, there are, let's say, 10 stones, and one person, they were carrying a stone on a ship to maybe trade with one other island, or it just fell into the sea because they are island people and sometimes tsunami come up or whatever. So that one stone got lost in the sea. But then all the people decided that the stone is still present. It did not disappear. It did not die. And like the ownership was transferred earlier, they just began saying, "Hey, I Arin, whose sea is in the bottom of the ocean, transfer my ownership to Vats."
Okay.
You see what happened?
Yeah.
Awesome.
So the stone is existing, but yeah,
Yes.
the yeah. Okay.
The stone was existing, but it was not physically there, and no one could access it because no one could go down the ocean and access. So, stones were just a technical means, but the real process, it was in the ledger or it was in the shared memory of the people involved. It was a network thing, not a physical stone thing. Stones just provided a base mechanism. That is what this example tries to prove. Hi Anand, thanks for joining. So I'll quickly recap it for you. I was just talking about the origins of RAI stones on the Yap Islands. These huge stones, they used to function as money, and people used to trade these stones by verbal agreement. Hey, that this stone that is kept here, it belongs to you now. And the community had to agree for the transaction to take place. And no stones were physically changed when they wanted to change money or wanted to buy a house, cow, or whatever. Yes. Now, when we see the history of money across the world, people earlier used to do barter system. We have already it in our economics. Then people shifted to commodity like grain, salt, cattle. Then we realized that metals, they serve as an excellent form of commodity. Metals are also commodity. Even gold, silver, bronze, everything is a commodity. But the good part about metals is that they last very long. They can be divided into many small pieces. They can be dense, and they can store a lot of amount of human work and energy. And across millennia, gold naturally emerged as the global currency. And why only gold and why not silver, bronze, copper? Because of just one reason: it is the most difficult to mine or increase the supply arbitrarily. That is the only reason. And because I just could not take gold out of the earth and give it to you, I had to spend a lot of time, energy, money, resources to obtain that gold. It preserved its value the most. And a fun fact, do you know that India was on a silver standard until like 18th century, and they decided that hey, gold is not a metal for common person, silver is metal for common, so we'll be on the silver standard. And the central bank, they held silver, or that time equivalence of central bank. But since silver was not really a good form of money because it could be mined easier than gold, so British ships and other countries, they produced a lot of silver and they dumped it on the Indian market. Thereby a lot of wealth was eroded from India and sent abroad. So by this we also established that having a good form of money which is source cannot be increased is cornerstone to economic prosperity. Now comes Bretton Woods. So we have established gold standard and it was the primary mode of operation for human society until we came to the digital age. And now everyone wanted to transact very fast because international commerce had boomed, people were communicating to each other, people were moving a lot, and it was very difficult to carry this all physical good. Plus it cannot be divided into subsections. What if I want to buy a chocolate? I can't pay gold for chocolate, right? So at that time, after the World War II, there was something known as a Bretton Woods Agreement. And world government came and decided that hey, we will put all of our gold inside the America, and America will print dollars for it, denominating gold. And that dollars were freely redeemable for gold. So I think it was $35 an ounce or something by 1970. That if I could give 35 US dollars to American government, they would give me gold. And even that piece of paper, it was a proof of ownership to gold, and the real money was still gold behind that. And then people started to trade in gold, people started to trade in dollars, and everyone was agreeing to their reserve currency that hey, okay, we'll all accept US dollars. But then paper can be printed indefinitely, and that is exactly what happened. In 1970s, America had gone to Vietnam War. They had spent so much on social spending, welfare, that they realized they had actually printed much more dollars than there was actual gold in their bank. If they had $100 worth of gold, they would have printed $500 of money, hence artificially supplying world with money which was not even there. And when countries tried to get that gold back, America refused, and it is known as a Nixon shock. It occurred in 1971, and ever since then, we are on what we call a fiat money. Fiat means by decree. So I will be using this word a lot during the session. Fiat. And fiat money is printed arbitrarily by a central banker. It could be Indian rupee, it could be Japanese yen, it could be Swiss franc, or it could be Zimbabwe dollar, which is worthless. There you see the $100 trillion Zimbabwe note. So that is fiat money. And now we'll see eventually what problems does this fiat money cause, and could Bitcoin be a technological solution to it. Till now, if you see, I have not even used the word Bitcoin yet, but I will now. So let us understand.
So basically, the money that is not backed by any physical quantity, any physical item, that is a fiat money, right?
Yes, not by a physical item. It is backed by authority of the state or the government who is issuing it.
Okay.
Or more important than the government, I would say central bank. We have something called as a Federal Reserve in the America, and they have the authority to print and collect dollars. But it is a piece of paper, and it is a promise that hey, I promise to pay the bearer a sum of X amount of rupees. So I have a dollar with me, and I have a rupee with me. If you analyze carefully, it says I promise to pay bearer a sum of X rupees, but that sum is the value in itself. There is no gold, there is no commodity, nothing is backing it except the trust of the people and the economy. And we'll see
Except
what
the
it does.
signature of the head of RBI. if
Yes,
I'm not wrong.
yes, but that it essentially means nothing. I can't
Yeah.
go take this to the RBI chairman and ask for money, because what will he give? It's just that I get salaries paid in it, I pay taxes in it, and government accepts it as a legal tender. That is what fiat money is, because everyone needs a currency of exchange. So we saw the problem with gold, that hey, it is very difficult to move around, it is not meant for the 21st century, and it is very less divisible. So we devised a solution that hey, we will keep it all at one place. We will give one person the authority over gold, and he will give us paper, and we'll trade with that. But that caused problems, because then the convertibility was suspended. Now another fun fact: people or governments, they can print as much money as they want. Central banks never run out of money, and that is, my friends, called as Cantillon effect. What it means is, you must have seen the prices of everything rising day by day. Earlier one house used to cost 1 crore rupees, now it's 5 crores. Why did the such a massive increase take place? There is just one and only one reason: that the quantity of money was increased. So governments, they want to spend money, and government usually issues bonds, and they ask central bank to print the money for them. Now you see that earlier there were, let's say, 100 rupees divided between 5 people, so each person had 20 rupees, and there were, let's say, 100 apples, so one person had the purchasing power to buy 20 apples. But then one person, who was maybe the central banker or the government, they printed 100 more. So now each one of us have lower purchasing power, because the value of goods and services, they remain the same. I want everyone to pause and give it a thought that hey, is this the reason that why my value of the currency is decreasing, or is everything just going up? Now, moving forward, that new money which is printed, it is with the government or with the RBI or any central bank. Now that money has to come into the economy, but it does not come to everyone equally. It usually goes to the people who own assets, and to the people who are in the finance system, usually the very wealthy people. And when the new money is printed, think of it like a stream. New money flows, and the elites or the asset owners or the people who are in the stock market or who have access to liquidity, maybe government contractors or government workers, they capture most of the money, and what little is left is transferred to the poor. Now what perverse effect it creates is that the prices of everything goes up. My home, it doubles in price. My fuel, it doubles in price. And the wealthy who do not really keep money, they keep assets, the value of those assets rise. And the working class, they are not able to afford anything. So that is what caused inflation. Now if you see that rupee is at all time low against the US dollars, there is just one reason, that RBI had bad monetary policy and they printed too much last year. And if you see, I also have a LinkedIn post regarding that where I predicted that hey, the rupee will rapidly lose its value. And it also functions as a reverse tax from the poor to the rich. So you see, government pays through its spending by the use of inflation. And any inflation, it is very good for the government because it gives them free money, because they are stealing your purchasing power by diluting the existing money supply. But it is extremely bad for the consumers because their purchasing power is eroded. And that is how our government is able to afford freebies, our government can distribute so much, spend so much on defense and all that. That money, it's not that it comes from nowhere, it comes from our purchasing power who are holding their assets, who are holding their debt. So I'll pause and open the floor for any questions that you might have regarding this phenomena. Yes, Kumar.
Is the Cantillon effect what they also call as the trickle down economy, trickle down theory?
Yes. It's the same, that those at the top, they continue to get enriched. That's why you see the net worth of billionaires going up and up and up, because they are the people who receive the new printed money supply first. And the middle class, they stay the same while the poor keep getting poorer. This is the result of going to a fiat money. When there was gold, since gold cannot be printed, so you retain your purchasing power. And when someone says that महंगाई बहुत बढ़ रही है or everything is becoming expensive, I say no, nothing is becoming expensive. Just compare it to the price of gold.
Okay.
So
Sense.
if you want to compare the price of a new house to the price of gold. If you, so in that terms, it is that the currency is losing value at a rapid rate, and it is in our best interest as people who work, people who dedicate their time, energy, blood, sweat, tears to protect that purchasing power. And we'll see of a new thing which might or might not prevent that, and that is I want you to decide of how good that system is. So come 2008 and a crisis is hit, where there was a great recession and central bank had to print a lot of money to bail the banks out. I won't go into the details of 2008 financial crisis. I'm sure all of us has heard about it. But essentially banks, they started to gamble with money and they lost a lot of money. So the government had to come out and print a lot of money to bail these people out, which caused a lot of inflation and the same Cantillon effect which I talked about. So after that, a nameless, unidentified individual or a group of individual, male, female, no one knows, named Satoshi Nakamoto. It's actually a fake name, not a real name. They came out and they posted a code that hey, what if we can have a direct peer-to-peer electronic cash? And that, my friend, became Bitcoin. And we tried to create sound money. So let's explore how things proceed now and how Bitcoin actually works. It is very technical in the details, but we need not to know everything. We just need to know how the process works. So right now, if I want to send let's say 100 rupees through the use of UPI, I will use government channels and I will use government money because that is the only way I transfer value. So, is it possible that we remove the trust from all the third parties and keep it strictly between the two peers, which is not backed by government, military, or any private organization, but by the rules which all of us agree upon? So, imagine this, that I have a private key, and that private key, as the name suggests, it is only within me and only I have access to it. And I have a public key which is a cryptographic hash of my private key. I know cryptographic hash is a really strange sounding word. I'll come back to it later. But just
Basically, digital signature
yes,
type of thing.
exactly. So these two are related: public, private. Public key I can give it to anyone. So I send what's my public key that hey what's send 10 bitcoins to this number, and he uses his private key to sign the transaction and send it over. And how can we know that if the connection is if the transaction is valid or not? For that we have a process known as mining. So let's say Alice wants to send some money. She signs it using her private key, and then all the network participants, those who are known as nodes, like if I use Bitcoin, then I also can run a node. We verify each and every transaction and if the rules are being followed. We'll soon be discussing the rules as well. But for now, that hey, that check, security check, private key check, working check. And then we wait roughly 10 minutes for the transaction to confirm. And a miner, they validate the transaction, and anyone can mine Bitcoin, you, me. It's not no central bank, no authority. It is an open mechanism and anyone can set up a software. What miners do and why would anyone mine Bitcoin is because the miners who successfully mine a block can produce new Bitcoin. Now you will say that hey, it is very similar to the previous Cantillon effect this time, but miners are getting rewarded. We'll come to that why mining is not the same as printing. And the reason why mining is not printing is because mining requires something known as a proof of work. Coming to the example of gold, why is it so difficult? Because gold needs to be taken out of earth, it needs to be processed, then mined, then melted, then refined, and then converted into usable form, and then tested every time we need to make a transaction. And similarly, we replicated that same functionality, but this time using electronic means. Instead of picks and shovels, we use high-end GPUs such as these ones, and these are called miners, ASIC miners. They only have one job, and to produce Bitcoin, and they consume tremendous amount of electricity to generate and mine Bitcoins. So unlike fiat money, which can be just printed, this requires an honest effort and a lot of energy being used. So it can never exceed the output, and it can never go uh, and it can never just being indefinitely printed. And we'll also talk about the process of mining, but right now I want to take you all through how that transaction works. So yes, imagine this is the previous block, 5,000 number, and these are the different individuals. All of us, all have our private keys, and our public key, it looks something like this. It is a hash of the private key, and we have our balances which we might have mined ourselves or which we might have obtained from miners. Now Vats, he wants to send Sumit 10 bitcoins. So Vats will sign a transaction using his private key. Miners will validate that block and establish that hey, ownership is proved and funds are also proved, and then the transaction will take place. So if you see from the previous block, 20 minus 10 because they are sending 10 coins, to now Sumit getting those same 10 coins. By this mechanism, first, no Bitcoin can be faked. It is impossible to produce any new Bitcoins which are not mined, because then the transaction would not take place. And secondly, we have the entire history of all Bitcoin mined ever, and every node which is running, and every miner which is mining. And by the way, guys, miners look something like this. So they require tremendous amounts of energy, and it is not something that anyone can easily just come up with. All of these are securing Bitcoin network, and every 10 minutes, the entire history of Bitcoin is validated again and again and again since its inception. There is also an interesting website where we can explore this. It's called as Meme Pool, and it's a way for us to visualize the Bitcoin's blockchain. So please interrupt me if anything is not making sense. But 2 minutes ago, a block was mined, and another one will be in roughly 10 minutes. It's not a hard and fast number. And mining a block usually requires solving a very hard mathematical equation, which takes tremendous amounts of supercomputers. I can go into the details, but that is not really required for the scope of this video. So these are all the transactions that are taking place for the next block. And if let's say I want to analyze a previous block, this is the block 950,000 block, and it had all of these transactions. Let us randomly pick one of them. We'll pick this one. Yes. So from this public key, they sent 0.01 Bitcoin to these addresses. Now we do not know who is the owner of this address, but we do know for sure that the only way by which Bitcoin could be transferred from this to this was if the person who is in charge of this public key had a private key corresponding to that. Because without the private key, you cannot sign a transaction. And imagine like opening a locker. Without your key, you cannot open that, and you cannot initiate a transfer of funds. So this is just one of the blocks, and you can see it has all the blocks ever since the history of Bitcoin, ever since it was mined in 2009 from Satoshi Nakamoto, and I can go and validate my transaction also anytime. So if I want to send Vats some money, I can send it, and Vats can directly go and check on this website itself that hey, if I really did send the money, or if it just I'm just claiming it too. So it is impossible to fake in practice. So another example, and importantly, there is also a small minor fee which you pay for incentivizing the miners to take your transaction in the block. Let's say there are 1,000 people and there is a limited amount of block space. So you just pay a small fee so that they would include your transaction, usually like very tiny amounts, a few cents. So I can from India send any amount of money anywhere in the world for less than 2 rupees. I can really send 1 crore, 10 crore, 50 crore anywhere without the permission of any bank. So I want you all to spend some time on this website after this call. You'll understand it more. And here you see total fees plus the new block subsidy and the median fee and some other data. I'll pause if anyone has any questions regarding how transactions take place. Yes, please, Anand.
Hey, Erin, thanks for conducting this session. So I joined a little late, sorry, 10 minutes late. So, I could not understand the agenda, the scope of this session, but just trying to, understand. Are you explaining Bitcoin ecosystem, right, technically, or are you trying to, educate us on Bitcoin investment?
So yes, a disclaimer. I'll also say it again after the call. None of whatever I say is financial advice. For that, please consult your financial advisor. I just want to tell about a new technological breakthrough which is happening and how this can change the world, or learning about sound money principles and how Bitcoin can provide as an alternate or a new medium of exchange. And before we trust that, before we come to the economics, it was important that we understood the technology behind that. So I was touching upon that. Plus, since most of my crowd is engineers, I decide to like go into slightly more depth than I usually would have.
Okay, sure,
Okay.
and thank you. It's
Yes.
clear.
Uh,
So Ari, just out of curiosity, this Bitcoin works on blockchain, right?
yes. Yes.
Okay.
Yes. And I was coming as to why it is called as a blockchain.
Hmm.
Let's go again to a Google Sheet. Now, it is called as a blockchain because this previous block is linked cryptographically to the next block. I come to the word cryptographic again. So I'll tell you how. For example, I'll copy this and yes. So hash, it is nothing but a fixed length representation and a function. And the interesting part about that, it is a one-way function and every hash is unique. So for example, if I place a huge block of text here, I'll just copy lorem ipsum text and paste it. Even if I change a very small tiny thing in it, just see what happens to the output if I convert this small o into the capital O, okay? It changes entirely, and you can compute hash from the text easily, but it is impossible to do that in reverse. And the reason it is called as a blockchain is because we use the hash to connect two different blocks, and what it'll typically have is, after all of the transaction, it'll also have a hash one, and this hash one will be converted into the starting hash of this one. So again, coming to this, you see that there it is a hash, and the hash of this particular block will form as the basis to make a next block. So all of these are mathematically connected. Let's come back to our slide. I'll come more on hashing later. So yeah, we were mining the bitcoins. Let's skip this. Now I'll talk about scarcity and halving. So every 4 years, the supply of Bitcoin produced per minute drops by half. So we saw that right now, when we produce a new block, new Bitcoins are being mined, but we want to stop that somehow. So every few years, there is a process called as halving, and initially 50 Bitcoin were produced every 10 minutes to incentivize more people from joining the network. But as it grows and grows, the block reward reduces. So you all have read about that half plus one fourth, that geometric progression. It all converges to an absolute hard cap of 21 million. There will never ever be more than 21 million Bitcoin, and that is what makes it such a fascinating form of money, because this is the only form of money in the world which can never be printed or diluted, as compared to the fiat money, which anyone can print at will, and which is only maintained by trust in the government and force. So yes, now if we compare Bitcoin to fiat money and gold, we find out that hey, the fiat supply is infinite, the gold is unpredictable. When the prices of gold rise, the miners, they start mining more gold and they flood the market with more supply, so the prices tend to be volatile and get stabilized. But with Bitcoin, there will never ever be more than 21 million Bitcoin, and we know the entire supply schedule. In fact, when I showed you the blockchain explorer, I showed you the entire history of the block and how many have been mined so far, how many need to be mined. To verify fiat, it requires a central bank, maybe someone holding your private wealth to know that okay, hey, this belongs to this. To verify gold is also difficult, but we require maybe a machine or some acid test. But with Bitcoin, we can verify it instantly within a fraction of a second. And fiat can be diluted with Cantillon effect. Gold can also be diluted with more people supplying gold in the market. But Bitcoin, it can never be diluted because it cannot be printed. It can only be mined, and the mining reduces every single 4 year window. Uh, yes. So I'll also talk about what provides. Yes, Anand.
So then fundamentally, this is Bitcoin is intangible, right?
Yes, yes,
Right.
yes.
Okay, and just out of curiosity, do I mean in India, do we have any regulation for Bitcoin?
Um, I'll answer the first part, and I'll come to the second towards the end of the presentation on the regulation aspect of it. But to
Sure, sure.
answer that, yes, Bitcoin is fully abstract. There is no physical thing known as Bitcoin, but it does not mean that it is just imaginary, because a lot of hardware and a lot of electricity is converting all of that physical infrastructure into digital scarcity. And we'll see why that there's tremendous amount of resources are required to maintain that network. Now, we'll also test about the network heartbeat, and I'll very briefly cover it because that's not really something which we want to address today. But hash rate is the amount of energy which is being directed to mine bitcoins. Now with gold, when we direct more energy to mine gold, we increase the supply of gold, but bitcoin adjusts it. So let's say if I 10x my miners, I made 10 farms. Earlier there was only one. So the Bitcoin will also become 10 times more difficult to mine. And it is fixed that one Bitcoin will only be mined, sorry, not one Bitcoin, one block will only be mined every 10 minutes. And it has a difficulty adjuster, it adjusts the difficulty accordingly. So for some reason, if there is a crackdown or if I turn off the miner, it will become easier to mine, and that is how it is self-regulating. Now, what secures this network, and how can I trust that my Bitcoin is mine and they cannot be printed or no one can take it? It is because of greed. All of us are greedy and all of us want to protect our money. So, with central banks or with the fiat money, we have an trust in the central bank that they will work for the best interest of the public. Though they won't, but we still trust them. But with Bitcoin, we don't have to trust anybody, we just have to trust that humans are greedy. So let's see what happens if you try attacking the Bitcoin network by producing fake Bitcoins. Let's say I set up my own machine and I try to mine my own Bitcoin, and because it's a code, it can be copied, and I'm starting to produce more Bitcoin. But since they need to be validated by nodes and all the other people who are participating in the network, if I try to cheat, no one will accept my block. So others, they'll reject it and I will have a massive financial loss. I would have wasted electricity, I would have wasted my hardware just to produce a fake Bitcoin. But if I join the network and play by the rules, I will earn a reward or a profit. And using the human greed onto themselves, this is how we secure the network. So if anyone wants to break into the Bitcoin, they can theoretically, but it would require the energy output of an entire nation, because that is how much power is backing Bitcoin. So yeah, you can go hack Bitcoin tomorrow, but for that you would need the energy output of Norway. And even if you try to do that, people will simply switch to a new algorithm, or they would see that okay, this much hash power is being accumulated, and it's very difficult to attack a decentralized network as compared to one institution. Yes, Kumar.
So basically, if there are two conflicting nodes, then the longer node is usually trusted and accepted, right?
Yes, that would be a chain. We can come to that, but we can have this discussion later on for now, because that will go
Sure,
into the how Bitcoin nodes validate the transactions, how blocks are mined. But for the scope of this, let's just stick to how it is produced and why it is almost impossible to attack the network. Many people have tried so far and they have all lost. And Bitcoin rewards honesty, it rewards playing by the rule. So when someone says that hey, Bitcoin is backed by nothing, it is backed by cryptography. That if you change one single block of, as I showed in the hash, if you change even a single letter in it, if I go back and try to change the transaction that I paid worth 10 Bitcoin 5 days ago, if I try to change one small thing, the entire following node will be corrupted and no one will accept my transaction history. So once sent, the transaction is set in stone and it can never ever be reversed. One. Second, thermodynamics. Because it requires so much energy, so much hardware, so much mining, it is impossible for anyone to gather enough power to attack this network. Now it has grown to multiple nation states, and Bhutan is officially mining their Bitcoin. Even Texas uses solar to mine Bitcoin. Russia, Iran, all of them similarly. So these countries who have not uh, coordinated on anything are suddenly, because of their own greed, are coordinating to mine Bitcoin. Then there's this game theory that hey, if I have my Bitcoin, I would not want to lose it, nor do I would want to have it lose its value. So I will never agree to make it more than 21 million, because to make any change in the code, at the base Bitcoin is just code which anyone can run, anyone can join, and it's a network of all of those people who are into this, just like this background. If I wanted to make more Bitcoins, no one would accept. And if someone else who is not a part of the network wanted free Bitcoins, then we would not simply give it to them, because that would undermine my own self interest. And the last one is the absolute scarcity. Because of the halving cycle, we saw that there will never ever be more than 21 billion Bitcoin. So the value of it always has to increase, because we saw initially that fiat money will keep on being printed indefinitely. So a finite supply asset with an infinite supply of money. And that is the thesis behind why Bitcoin came and why it could be a great asset to protect your wealth. Why? Because of its property of being decentralized, under no one's control, and borderless, permissionless. It is a fascinating case study of what people have come up with. Now, right now, I can spend what's any amount of value in the form of Bitcoin, and it would take like very little time. and this was not possible before. So lots of refugees from Ukraine who were stuck in the war, their houses were destroyed. They could not carry the gold because the border guards, they seized all the golds. They had the private key of a Bitcoin and they crossed the border and they instantly had all their wealth. Plus, it is also one of the best performing assets in the history of humanity. You would have seen the graph of how it like just kept on going on and on. So yes, that was fundamentals of Bitcoin from you, how we replicated the principle of thousands of years that we need a coordination mechanism and applied modern cryptographic principles and modern science to it to come up with this money. And why? Because of the identity of the creator remains anonymous. It is impossible to attack. No one can attack Satoshi Nakamoto because no one knows who he even is. And even if he comes out tomorrow, then a beginner would ask the question that, hey, what will happen if Satoshi comes tomorrow? But those who know about Bitcoin know that Satoshi Nakamoto does not have any more authority than me or you, because it is an open source code. Anyone can go, anyone can review the code, see the repository, validate the transaction. So the smarter question would be, so what if he even comes tomorrow? So what? Yes. Let's open this call for questions. I'll be taking any doubts, any clarifications, or any gap in the understanding I might have left out. Feel free to ask like about hash rate of or about adoption or what is in it for you or how it's beneficial, anything. Okay, then I assume that uh, everyone learned something from this session. I know that 1 hour is not enough to understand Bitcoin because it requires a lot of time, energy, and effort to understand. But once you see the relevance through fixed money principles and how and where we are heading towards, maybe this will serve as a way or a framework for us to understand the world, that why do prices keep rising, why does the rupee keeps falling against the US dollar, why is petrol at all time high, why is gold at all time high, because fundamentally the value of our currency is depreciating, and the only way by which people have preserved their wealth across generations is by holding scarce hard assets. Scarce assets are South Bombay land, they are gold, they are Bitcoin. And whoever has held through scarce assets has seen their wealth grow, whereas people who just saved in their own local currency have seen their purchasing power constantly diminished through the force known as inflation. And take some time. I'll be available after this call as well. If anyone wants to talk about Bitcoin, I'd be happy to talk to at length. So feel free to reach out to me. And yeah, I hope you all have a very nice day. Yes, Kumar.
My question might sound a bit off the topic, but I genuinely want to know, like, there's Bitcoin, there's Ethereum. These are the cryptocurrencies that sound authentic, that sound like they have a huge network behind them. But then at the same time, we also see Dogecoin and a lot of very gimmicky cryptocurrencies out there. So, do they also work on the same framework? And if yes, then what's the difference between these two? Like, how can we convince ourselves? Like, now after this session, I can trust Bitcoin very easily. But then again, there are certain cryptocurrencies out there that are not that trustworthy. So, how do I make a better judgment out of it?
That's a great question. Thanks for this, Kumar. Yes, it is true that Bitcoin was the first cryptocurrency, and I can create tomorrow, I can create Arin coin, you can create Kumar coin. But what is important, as we saw, was not the actual units or not the actual name of the currency or the protocol itself. It was the network that was backing it. Since Bitcoin is the first one, it has no leader, it is truly decentralized, and it acts as a shelling point. it is like saying that I can invent a language tomorrow, but no one will speak that language. The reason why all of us are speaking English is because English is a protocol, and protocol tends to stick and be unique. So if everyone decides that hey, English is the best medium of exchange, of communication, because all of the powerful and rich people use English, then in order to join the network we would have to speak English. Tomorrow I can invent a new language, but again, so Bitcoin has the highest adoption and it is the cryptocurrency. Even with Ethereum, I usually don't really love to talk much about Ethereum, but it does not act as a store of value. It is more of a play store or a web application. Now, we can go on this, but Ethereum basically acts as a decentralized way to build and host apps. However, Bitcoin just serves one function, and that is to protect your property rights by not increasing the scarcity. There will always be 21 million, and when you own a share, if I own one Bitcoin, I will always have that one out of 21 million, and it cannot be diluted. So that is the sole function of Bitcoin, and all the other ones, they can be used for different purpose, like high frequency trading, maybe betting, or maybe being used as a collateral. But when it comes to the network effects, Bitcoin is the strongest, and it remains to be logical that even if 10 new or 100 new are launched, they would not make a dent on Bitcoin. So that is why people always differentiate between Bitcoin and crypto. Those are two totally different things. Even though Bitcoin is a form of a cryptocurrency, it is fundamentally different from all of them, because now, and because of the time it was created, no one paid attention to it except the people who were like libertarians or wanted to rebel against the government, and they ran it. So now it is decentralized enough that it is impossible to attack. But if I launch a Arin coin tomorrow and people start using it as money, Indian government will simply come and put me to jail, thereby killing my entire project.